Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Ryan, it's great to see you as always. Welcome back to Trade Talks, and I cannot believe we are at our final segment of the year for 2021. It just went by so fast.
I know, you blink and here we are ready to turn the page on 2022. It's hard to believe.
Yeah, it really has. So let's talk about weekly performance. We'll get into some 2022 content in a bit, but let's talk about how the Qs have performed and what's been a volatile December.
Yeah, so I think when we're looking at QQQM and QQQ, up 47 basis points for the week. We beat the S&P 500, which was up by 0.34%, and we underperformed the S&P 500 value, up spot 6.1%. You know, it's sort of been the same story. We're weighing COVID fears, authorization of at-home treatments as kind of everywhere we turn. It seems to be Omicron. But you know, I think we extend it out and look at the year. We're in a pretty close heat here. We have QQQM outperforming QQQ, which is a function of the lower expense ratio as well as the flexibility of QQQM, where the PM can reinvest dividends, helps to reduce a little bit of the cash drag that exists on QQQ. But looking at QQQ and QQQM, underperforming the S&P 500 by 77 basis points, outperforming the S&P 500 value by over 3%. So, you know, this next week or so of trading will be interesting to see who takes the crown for 2021.
And Ryan, when we look at year over year, QQQ versus SPY, there really is an interesting story to tell there as well.
I think for sure, right? Last year we kind of looked and you and I discussed how we wouldn't really be surprised if value outperformed growth this year. I mean, that was really our base case, and that held true for the first half of the year. We saw cyclical sectors outperforming. I was kind of amid a backdrop of robust economic growth, a very accommodative Fed. But as we progressed and sort of moved into June and as the summer matured, markets were affected by, of course, fears from the Delta variant, and now, of course, we have Omicron, as well as the Fed's response to the risk of inflation that at that point was clear it was no longer transitory. So sort of over the summer and into the fall, we saw investors gravitating back towards large cap growth, and saw outperformance of QQQM and QQQ over the S&P 500 index over that time. So, you know, I think kind of at that point, well, where does that leave us? And for starters, I mean, the market's been very focused on the Fed and their inflationary response. From the Fed's dual mandate, I think on the employment picture, we're very close to full employment. We're closing in on pre-COVID employment levels. We saw the best initial jobless claims since September of 1969. On the other hand, you have inflation. So inflation is certainly elevated, right? We talked about the word transitory, how it's dropped from the Fed's lexicon. The quickening of the pace of their taper suggests that the economy is strong enough to not necessarily have an asset purchase program attached, and gives the Fed a little bit more flexibility in terms of the timing of liftoff. So can be a little bit more aggressive you know, in case that's warranted, in action against rising inflation. So looking into 2022, the expectation, of course, as we said, is for 3 rate hikes and 3 rate hikes again in 2023. The Fed had already discussed not raising rates until the asset purchase program has concluded. So that's kind of where we sit.
Yeah. And Ryan, let's talk about some other macro data that came out. The ISM, you know, it's such a key component of our economy, especially as we talk about inflation, as we talk about supply chain constraints and so forth. This is another leading indicator that's important to watch.
Well, you know, I think that as you look at ISM manufacturing and sort of our view on the year ahead, we're probably at or near peak economic growth, right? So you look at GDP, it's been influenced by a number of forces, but going from Q4 last year, Q1, Q2 of this year, all showed pretty strong growth. Q3 was a little bit of an outlier because of some of the effects of Delta. Q4 is largely expected to be better. We'll see what happens with Omicron. But, you know, ISM manufacturing is over 60. So that doesn't happen all that often. And we've seen 5 readings back in 2003 and 2004 over 60. We saw 2 readings over 60 in 2018. And thus far, at the end of 2020 and into 2021, we've seen 9 readings over 60. So it also included the highest reading in the past 20 years, which was in March at 64.7. That also is the highest reading since 1983. So likely we're kind of turning the page from expansion into the slowdown regime of the economic cycle. Slowdown does not necessarily mean the end of the bull cycle. It's really just economic activity, economic growth is slowing off of these very high growth figures, and we're kind of moving back closer to trend. So, in periods where growth is slowing and maybe becoming more scarce, what we've seen traditionally is investors gravitating towards the growthier strategies, the growthier stocks. And at this point, as you look at the chart, we're looking at periods where ISM manufacturing was either over or near 60, and then subsequent performance of QQQ versus the S&P 500 until the reading moved to around 50. Now, 50 for ISM is the line of demarcation between expansion and contraction. So going back to the end of May, 5/31/2004, ISM was at 61.4. Going through the year end of 2007, where ISM kind of declined to around 50.1, so right about at that line, QQQ outperformed the S&P 500 by 3.17%. From February 28th, 2011, where ISM was at 59.2, through the end of June 2012, where ISM was at 49.5, so just below that 50 level, QQQ outperformed the S&P 500 by 6.85%. And then from February 28th, 2018, with ISM at 60.8, through the end of August 2019, where ISM landed at 48.4, the first kind of drop down below that 50 level, QQQ outperformed by 2.6%. So again, in this world of kind of slowing economic growth here, it'll be interesting to see if QQQ outperformance follows suit going forward in 2022.
All right, Ryan, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.